So what we're going to do is we're going to talk about the types of special finance departments, the benefits associated with them, and some of the misconceptions with special finance. Unfortunately, it doesn't look like that today. It's flooded, it's raining, flights are canceled, but y'all made it, and we're going to make the most of this. We're going to have some fun. It's going to be informative. Global lending services. Most of you probably haven't heard of Global at this point. We're fairly new. We entered into the marketplace last year as a subprime lender. We acquired a company out of Greenville, South Carolina, Resurgence Auto. They were deep subprime. 95% of their portfolio was independent, 5% franchise. The company was founded and formed by Doug Duncan, who was the founder of Safeguard International, F&I product provider. He went into the channel of special finance to try to make an impact. We're going to take it nationwide. We're currently, since we've come on in 2012, we're now in 17 states. We should have everything east of the Mississippi licensed and going by the end of the summer, and we'll be nationwide by 2014. I came on with Doug. I worked for him at Safeguard. He brought me over. He had a vision for a subprime retail strategy. And you're probably thinking, what the heck is a subprime retail strategy? Well, most franchise dealers don't have any strategy when it comes to special finance. So what Doug thought we would do is we would create a division that goes into franchise dealers and identifies them as high producers that do a great job in the franchise world and do nothing in the world of special finance. Me and my team go in free of charge, and we set up dedicated special finance departments, a dealer within a dealer, so to speak, in these large franchise dealers. A little bit on my background. I've got 10 years of experience on the retail side in special finance. I ran the largest special finance department in the nation out of Arizona for a private cap company. Mr. Tex Earnhardt owned it. We started off fairly small, and we grew into, at the height, we were doing 700 subprime contracts per month. They're still doing around 500 a month today. The market stepped back a little with the recession, but they're still rolling and doing a phenomenal job. The department was called Mr. Ed. Let's talk a little bit about the automotive finance market in general. $300 billion industry, auto finance. $100 billion of that is subprime. The near prime makes up a small percentage of it. What percentage of the dealership that you're in is subprime? Why do we ask this question? Well, with 35% of the market, of the credit market being subprime, it's really important that you analyze what your percentage is. This is a huge area of opportunity and growth within the dealership. Are you capturing your share of the market? We'll come in and we'll assess this. We'll take a look at what you're missing, where you can grow, and how we can develop this channel of business to where it benefits all aspects. And we're going to go over all the benefits here throughout this presentation. What is a dedicated special finance department? Well, there's a bunch of different models for a dedicated special finance department. We're going to go over all the different models, the different types of special finance departments today. But this could be the largest profit center in your dealership, okay? And it is the incubator for future sales, which I'll explain later into this presentation. Some of the benefits of a special finance department. There are so many benefits, I'm not going to go over them all today, but we're going to touch a few of them, okay? Increased sales volume. The majority of franchise dealers that I walk into are pretty content with their sales volume. Somebody walks in with a 480 credit score, and they don't really have a strategy or a plan. So they'll tell them to go down the road. Well, where do they end up when they go down the road? They end up in a mom and a pop, independent dealer, non-franchise, that takes all the cars that the franchise dealers wholesale that really aren't frontline worthy, and they stick them in these cars at ridiculous interest rates, at inflated prices, because there's no real loan-to-value issues when mom and pop are lending the money. And we're taking people who are in a pretty rough situation, and we're sending them down a channel that puts them in an even worse situation. Increased gross net profit. That's kind of a given. This customer is a captive buyer. They'll go along with the program, so to speak. Once you identify the fact that there's going to be bank restrictions, they'll go along with the bank restrictions and pretty much have you select the collateral for them. That allows for you to increase your profit on both the gross and the net side. When I was running the special finance department, we averaged on the 700 cars a month, about 3,000 front and back. That's a month. You do the math on that. That's humongous. Now, a lot of the dealers that I'm going into and I'm consulting with, their goal is to get it to 30. Well, if you do 30 cars a month at $3,000 a month, that's an additional $1 million a year in revenue. A lot of the topics we discussed this week, they're going to help you get more revenue. They're going to help you get more sales. Are they going to make that kind of an impact? Probably not. Though they're all beneficial, this could be the largest area of improvement in a franchise dealer. Incubator for future sales. When we first started the Mr. Ed department over at Earnhardt's, we started in our Dodge dealer. At the time, we had 3 rooftops. We had a Dodge store, we had a Ford store, we had a Chrysler Jeep store. We started in the Dodge store. When we began this department, we were number 3 in the city of Phoenix. Within 42 months, we were the #1 volume Dodge dealer in the world. We held that title for 9 years straight. So I run into dealers who say, well, I don't really want to mess with my franchise business. You know, we're plugging along, we're making money. You know, it's comfortable. We're comfortable here. Okay? Then this program might not be for you if you're comfortable. But if you want to take your sales to new levels, this is the greatest area to do it. And here's why. You've got people out there who have had some tough times due to circumstance. Most of the people that I interact with on the customer side of special finance don't have character issues. It's circumstantial. These folks come into your dealership. When you have a strategy and you treat them a certain way from start to finish, that customer will be a customer for life. Yeah, they're subprime, they're special finance, they're whatever term you want to use today. When you wrap your arms around them and you sell them the future, you have a franchise customer for life. Not only do you have them, you have everybody, that their family, their friends. There's no better referral. There's no better repeat and residual buyer than the special finance buyer. But for some reason, most franchise dealers are so engulfed in the world of selling new franchise cars, they don't pay them any love. They don't pay any attention to them, and they send them down the road to an inferior dealer selling inferior cars. This is the incubator for future sales. When you're in a sales meeting and your owner's saying, we need to find a way to sell more Fords, we need to find a way to sell more Toyotas, whatever your franchise is, it's right there, it's under your nose. I pull demographics on the dealers I go into. I just pulled one in Atlanta 2 weeks ago. Within I think it was a 20-mile radius, we had 5,500 people that were identified as good special finance, 550 to 620. They're right there. They don't come frequent, this dealer, because this dealer has sent a message over the years that you're not really welcome here. And it blows me away. It's wrong, and I'm going to raise the awareness to it throughout this whole nation. I'm speaking everywhere. I want everyone's awareness to be raised to this topic of special finance. So the incubator for future sales, to me, that's the most valuable increase that you're going to see in the area of benefits. What we do today, and we make $3,000 a copy, we have a happy customer, it's great. It's when they channel into that franchise side and they're buying Fords for the next 15 years and they're bringing their children in for their first car. That's what we're going for. That's the vision. Now, types of special finance departments. I'm only listing a few here. There are so many hybrids out there that exist. These are the ones that I identify most with in my travels. Number 1 is a save a deal department. It may not even really be a department. This is a strategy for special finance that most franchise dealers employ. And the way it works is they have 2 or 3 special finance or subprime banks on their dealer track or their Route 1. Customer shows up. It's the exact same process they use for a prime customer. They meet and greet. They find out what the customer's here to see. They take him out and sell him the car without ever really pre-qualifying him. Now we get to the point where we're doing numbers. Customers on too much vehicle, more than they qualify for, they don't have enough down payment, and we put them in the vehicle and we hope for the best. When everybody says no to it on the primary side, those 3 banks on the bottom of the dealer track get clicked. They generally say no, or they qualify call it. It turns into a rehash. The dealer does whatever they have to do to keep that buyer in that vehicle. Usually it is lose $600, $800 on the transaction. The contract and transit time on these is off the charts, 10 to 15 days. I've seen dealers that have a buyer in a car for 30 days while they're looking for a cosigner, more down payment. Most of the time they put them in the new car because that's what they're trying to sell, and the customer just went along with what the salesman was trying to sell them. What happens to your survey on that buyer if you get that car done? It's usually toast. You end up taking a customer, giving them a horrible experience because you didn't work the deal the right way. Yeah, they got their new car. Yeah, they got a great deal because you had to cut it and you weren't allowed to keep any profit because of the restriction. You got a bad survey, and you probably got a customer who's never going to come back because you called them and you tortured them for 2 or 3 weeks and it wasn't a smooth deal. That's the most common. Most dealers that do this don't even have a strategy and acknowledge it as a save a deal department, but that's really what it is. It's a save a deal department. Second is your semi-dedicated desk manager, finance manager. These occur in areas where you have a high volume of low credit scores. The dealer acknowledges that, hey, we're getting a lot of traffic on this. Like it or not, let's try to sell these people cars. So they take one of their desk managers who usually has a little bit of experience in this, and he kind of becomes the go-to guy on this. So you'll have a credit bureau pulled all the desk managers and don't want anything to do with it, so they hand it to the one guy who has a little bit of an area of expertise in it, has some experience. He'll do the best he can to try to figure it out, make a car deal. It'll be semi-structured properly, probably landed on the wrong car still. You'll probably have a billable deal, and you'll be in the same boat on the CIT. What do CITs do to owners? They drive them crazy. Owners pull that CIT report every day, and they're wondering, why are these contracts not funded? Well, they're not funded because they weren't set up properly. They weren't structured properly. They weren't put on the right car. You treated a special finance customer the way you treat a prime customer, which is really not the way to do it, and it's unfair to the customer. Okay, the semi-dedicated desk manager, finance manager exists all across the country. It's not really labeled, it's not identified, there's no strategy. It's just, it happens. It kind of morphs into that. Dedicated desk manager, finance manager. This is where you have an owner or GM who says, hey, we need to make some money off of this. There's way too many people walking in this dealership that are below a 620, and we're not handling them properly. I'm identifying you. You're now my special finance manager. You still got to work the desk. You still do the same job, but when they come in, we're going to try to identify them a little earlier in the transaction, get you involved so the structure's right. Gross profit on these are generally better. CIT time is reduced. Funding time is reduced. There's also a lot of these running around the country where you'll go into a dealer, there'll be one dedicated desk manager, there'll also be one dedicated finance manager who kind of has a little bit of rapport with those 3 bottom banks, and he'll specifically, or she'll specifically get that deal because they have the relationship to make it work. Dedicated special finance department hybrid. These are for the owners that get it. They don't want to make a major investment in a dedicated special finance department. So what they do is they identify generally one desk manager, one loan processor who will handle the phones and the leads. And the reason we call it a hybrid, they utilize the sales force, the current sales force, to work these deals. What happens is they'll identify at some point during the transaction that it's special finance. That salesperson will then take that deal to the dedicated special finance manager, who will then pretty much stop the deal in its tracks and start over. Sometimes they'll keep them on the car they're already carred up in. Ideally, in this format and this type of special finance department, we try to train the sales force to identify the customer prior to carring the customer up. Does it happen? It's really difficult. If you've got a sales force of 30 people and they're experienced salespeople, they have a certain way they do things. It's very hard to take that salesperson, have them be able to work a deal a different way mid-cycle when they find out by asking the qualifying questions, and be really successful at it. With that said, there's dealers that can sell 30, 40 cars a month doing this. They utilize the salesperson. You basically have a little office within the dealership where that special finance manager works. He instructs the salespeople what to car them up on, all the parameters of the deal, and then that deal will run through the regular finance department for contracting, come back to the special finance desk manager, who will then rehash the deal, get the approval, package the deal, and take it to the billing office. Okay, that's the hybrid. It exists all over the country. This is by far the most successful and the least adopted. This is what we had developed when we were doing 700 cars a month. It was a true dealer within a dealer. We had our own marketing, we had our own CRM, we had our own systems for everything. We tracked all of our own lead sources. It was a dealer within a dealer. In order for this to be successful, and we're going to talk about this throughout this whole presentation, it takes ownership and general management and senior management commitment. They have to retrain the dealership that these customers that walk on the lot are ours. Our name is on the building. We are going to separate these customers in the direction they belong. Prime gets worked this way. Special finance gets worked this way. Everybody on the lot understands the qualifying questions. Rarely ever is a customer card up prior to being identified as special finance. When this occurs, you get to 30 deals real quick. Then you grow to 50, and then you grow to 100, and then the sky's the limit. Because the word gets out real quick that you are friendly to this community of buyers, and they all just start showing up. They go to your dedicated website. They do a confidential loan approval online. You identify them and set the appointment prior to them coming in with all the needed stipulations. When they buy that car, it's delivered, it's billed, it's funded. 72 hours was our turnaround time on 700 cars. It can be done. It's actually really simple. We're not reinventing the wheel. It's just a different process that needs to be treated differently. Any franchise dealer that's doing a ton of volume on the retail side that is open to hearing this and understands the benefits immediately jumps on board and makes the commitment. Okay, so you're now at the starting point. The dealer says, yeah, I'm in. I want a dedicated special finance department. Where do I begin? Well, they may think they want a dedicated special finance department. They've only gotten they haven't gotten the meat and potatoes yet. They just got the pie in the sky. What I recommend to everyone is this book, okay? I don't get paid a dime on this book. This book, I make every one of my dealers that I'm going in to consult with read cover to cover before I commit to anything. Greg Goebel does an amazing job on this book. It's kind of bittersweet for me because I had plans to write a book on special finance. I can't really write the book because everything I would say in this book, Greg says. Greg hit it right on the head. We started at about the same time in special finance, had a very same trajectory, track record, worked through our processes. This is the starting point. Anyone who's interested in making an investment in special finance, invest the $50 or $60 in the book. Read the book, and then we'll sit down and talk, and you'll ask me about all the pitfalls and the potential misconceptions, the benefits from reading Greg's book. I'm a huge fan of this book. I make every one of my dealers read it before I commit to them. The essentials of a special finance department. There are more, but these are the absolute musts. You can put a special finance department together. If you do not incorporate these, it will never reach its maximum potential. It'll never reach the capacity of volume, profitability, growth. They're essential. That's why I'm using the word essential. Number one, the management commitment, guys, it'll never work if your senior management isn't committed, because they're going to have to hold everyone in the dealership accountable to these processes. And the people you're going to have to hold most accountable are the ones who aren't doing special finance. There's going to be some friction. The primary guys are going to think the secondary guys are stealing their deals. They're not. There's going to be animosity. They're selling our inventory. Again, it comes back to the ownership. When the ownership walks up and you pull a 490 Bureau and you're thinking you're going to sell them a new Ford, and the owner puts his hand down and says, that's my customer. It's going over there. We're not going to play this game for 3 weeks and roll back this car and potentially ruin this customer forever getting an oil change here. When that occurs, when you send someone home in a car that they don't qualify for, and they fall in love with the car, and they show their coworkers, and they show their family, and then you have to take that car back, that customer will never do business with you, ever. But yet we do it every day in all the franchise dealers. Throw it against the wall, see if it sticks. There's no reason for it. Identify, hire, place, and develop special finance professionals. The majority of these professionals can be developed from within. You need PhDs, poor, hungry, driven. And by poor, I don't mean financially. I mean, because sometimes those guys will have a little too much larceny to be in special finance, and that doesn't work. Poor, what I mean is knowledge. People who have come in the car business and want to make it a career, that want a long-term career. They want an opportunity to go in there. They're willing to come in earlier, stay later, and commit to making this special finance department the greatest thing ever. And when they do that, and this department takes off, they'll probably be one of the top 3 highest paid people in the dealership, because that's how much revenue you're going to generate. The employees of this department will get paid a percentage of what the department generates. You saw the numbers in the beginning. The sky's the limit. These guys can make more money. These guys and gals can make more money in special finance. So when you put it out there to them, you're going to have people fighting over who wants to go in this department. You generally don't want the seasoned salesman. Too many bad habits, can't reteach them. You want the PhD, and they exist. As far as the people running the department, there's a lot of talented special finance managers out there in the country that want the opportunity to work for a committed dealer that's going to let this department grow. Identify them is a little tougher. There's not really a channel for special finance out there in the world of employment. I help to identify a lot of that through the social media. I reach out to people who are currently employed that want a huge opportunity, got them in, kind of in my Rolodex. Their owners don't know. Their owners are saying, no, I'm not spending any more money. You're doing a great job with 30 cars a month. We don't want to go any bigger. That candidate is looking for an owner that has 3 or 4 rooftops, that's going to have a shared processing center, that's going to get into the 100, 150, 200 cars a month, because that employee right there knows how much money they can make. They know they can make a lot more than the general manager when they're running that department. Stock inventory specific to the special finance customer. Always a challenge, but it can be done. The most successful dealers in the country do it. You got to retrain your buyers how to identify the vehicles that fit the bank programs and the customers. They're out there. I didn't talk about it in the benefits because there's so many benefits. Our service revenue went through the roof when we started the special finance department. Cars we used to wholesale and make $200 on, we're now spending $1,000 on reconditioning, and we're putting all these cars through the shop that never went through the shop. Granted, we did it at a discounted rate, discounted labor rate. We would generally do it at about half the rate. But that's still, if you're putting 30, 40 cars a month through there, you got to hire more technicians. You got to open more bays just to accommodate this channel. So though I didn't put that in the benefits, that's a huge benefit. Service department, you're going to create new jobs in the service department, create more revenue. But stocking the inventory is not that difficult. As a matter of fact, a lot of these special finance buyers that are coming in have a decent frontline car for the next special finance buyer. They are looking for improved, reliable transportation. Though most of these buyers don't know it when they show up, the special finance managers and professionals quickly educate them that this is a need purchase, not a want purchase. The want purchase comes next time when you're at 2.9% through Ford. And when you're straight up with them, they're usually grateful. And when the transaction is done and you put them in that 2010 certified pre-owned Fusion, they're hugging you and sending you everyone they love, as opposed to the Explorer for 45 grand they thought they wanted when they came in. That customer trades in a 2007. That 2007, for the guy who has multiple repos but now has a great job and great income, that's the future to them. So their trade-ins become frontline. Everything becomes frontlineable, except for, the real wholesale pieces. Okay, marketing and advertising strategy and partners. When I go in and train and consult, I already have all the partners dialed in. Depending on what the level of commitment is, I just open the doors and introduce to all the partners. They can choose who they want for internet leads, technology, CRM. It's all out there. The special finance channel, technology has improved the special finance channel in the last 5 years like I've never seen it. I mean, you can have guys and gals that don't really have a ton of desking experience. These tools match the bank to the car, to the max profit to the customer, and you can basically send it on a mobile app to your finance professional on the lot who's trying to car them up, and you can show your gross profit on the top 4 cars on the lot. It gives them a strategy in showing vehicle on the lot. So there's a ton of technology and marketing partners out there that you'll implement. As far as the implementing a dealer-specific scalable subprime process, it's different. We work it backwards. We want to get the credit information, the income information, everything first, look at the parameters of the loan, and basically originate a loan first and then match the collateral to the loan. So it's an absolute 180 from the normal sales process. It's easy, you implement it, and then I'm going to skip over real quick to the last one. This is the most important part of the process. You can implement the process. If the senior management is not willing to put the effort forth to hold everyone accountable to this process, I don't know how long it's going to be successful. Because eventually you'll get rogue desk managers and rogue salesmen who, I can get this deal done. Okay, go ahead and do it on your process. We're back to the 30-day CIT, losing $800 to keep them in the car, begging for the cosigner, asking for stips 2 weeks later. It's the process we want to avoid. Compensation plans, you got to make it to where the special finance department benefits everyone in the dealership. The way we did it was, when a salesman took it up, he asked a couple quick qualifying questions before he carded him up. Got him inside, did a 5-liner, pulled the bureau, flipped it to the special finance department. We worked that deal, he never had to see him again. If we made that deal, he got a unit count. He also got the mini plus $100. When he got to 5 of those for the month, we retroed back another $500 bonus on top of it. So as a salesperson, I got a real incentive to identify that customer quickly, get him over there, get back up on the up list. On a Saturday, the really good salespeople would always sell 2 cars. We'd sell one of them he spent 5 minutes with. She'd sell one of them that took it up an hour later. So the compensation plans are great. This also goes for the desk managers, used car managers. If you're paying them on the gross of the store, this is going to add probably 35% to the revenue of your store. If you have to tweak the percentages because your revenues are going to go up so much, they need to get a piece of it. So as a desk manager, if I pull a credit bureau, I stop penciling the deal, say, do me a favor, go walk this down to the special finance professional. We'll start all over. The face of special finance has changed. Many years ago, we all know what the special finance customer was. You've probably heard the terms if you've ever been in a dealership. Terms I don't ever use, terms I don't let my dealers use. You know them, roach, rat, bogue, whatever they use. When I go in, that language is eliminated immediately. And I need the ownership at the commitment level that if somebody uses that terminology to squash it immediately. Make sure that message is sent to everyone. They are not bogues. They are not rats. They are not roaches. These are our customers. We are going to embrace them. We are going to love them. And they are going to be Ford buyers or Toyota buyers the rest of their lives. And you're going to get to know their families because they're going to send them all to us. Eliminate that verbiage from your vocabulary immediately. Okay? How has the face of special finance changed? Well, the credit market's changed. How many people in this country today are falling into the special finance channel because they got into the real estate boom? They decided, heck, I can go in 0 money down. I'm going to buy a few rentals. These are people with 20-year jobs, 10 grand a month incomes. Well, they bought those homes at the wrong time. They got 3 of them that they bought for $150 each, or for $250 each that became worth $150 each. What did they do? They strategically defaulted. That customer now falls into this special finance channel, and they're not Joe Dirt. They got stability. They've got ability. They've got intent. They had some circumstantial issues that caused them to be in this channel. That customer ain't going to be in this channel long. They're smart. They're going to finance the lowest amount of money they can for the shortest term, pay half the term, take 2 pre-approved credit cards that come in the mail at the 12th month of making their car payment, have 3 or 4 open trade lines, and quickly go and get a 2.9% loan on a $40,000 car because they're capable. But for some reason, franchise dealers still think this is the face of special finance. I'm going to do my part to raise awareness nationwide on this and try to get these doors open to the customers that deserve a second chance. Myths associated with special finance. Setup is too costly. Well, these dealers set up a dealership. How costly was that? The dealership's already set up. The inventory is already in place. You've got finance departments set up. You've got talented salespeople. It is not costly. Your initial investment will be recouped in 30 to 60 days, and it's all gravy from there. That's just a simple myth. Can't find reliable personnel to staff the special finance department. You found reliable personnel to staff the primary department. It's the same people. Pick and choose your go-getters, your PhDs. Promote them. It opens up more opportunity for others. Everybody benefits. The dealership that does this, the morale goes up because people are getting promoted. They're making more money. You're creating more jobs for the community. The third one I get from my franchise owners more than any. We've worked real hard to kind of keep that clientele out of our showroom. Really? Really? Okay. Let me introduce you to the clientele. Let me work the deal, and you can stand behind me and watch. and watch the reward when this deal's done, how much they love your dealership. And they're not the guy you think they are, or the gal they think they are. Huge acquisition fees, discounts. There are some banks that charge huge acquisition fees. If you're not doing special finance, you're not making any profit. So if you make $3,000 on a risky customer, and the finance company says, hey, I need $1,200 of that up front, you do the math. It's still that much more money that you didn't have. You now have salespeople who have a sale they didn't have, who have gross profit they didn't have. It raises the level of everything in your dealership. High risk of loss of inventory. If you hire the wrong people, you could have high risk of loss of inventory. If you don't train your people and hold them accountable, sure, you could have a higher risk of loss of inventory. If you don't have all of your stipulations up front and you haven't done all your verifications, don't roll the car deal. The days of sending them home and sending it off to the bank and hoping they do all that, it's crazy. Do it all at the dealer level. The way we had it done when I ran my department, we had processes in place to where we verified employment, we verified rent, we verified everything, and we put it on a form, we signed it, who we spoke to, date and time, to make it that much easier for the funders. After about 50 of those all checking out, you think the funders looked at my deals as close as the other dealers? Heck no. They saw it was for me and just funded it. Special finance team can be a liability and a cause for compliance concerns. It can. I never recommend that any of my dealers that I consult with let the special finance department contract deals. Every customer goes through the finance office. That team are professionals in the area of Regulation Z, all of the compliance concerns. To think I'm going to have a special dealer within a dealer, we'll let them do their own finance, it's just not smart. Send it to the finance professionals in the back that always in your finance department. They'll maximize your back end. They'll minimize compliance concerns. As long as you don't let the special finance contract deals, there's no compliance concerns. Making an impact. A dealer within a dealer dedicated special finance department is more impactful than anything else you can do in the dealership because you're changing lives. Allows the customers to purchase in a comfortable environment of non-judgment where staff treats all customers with respect and dignity. I'm raising your awareness to this today. When you're in your dealership, ask yourself honestly, is that happening? Do you provide that environment? No. They call them names, they talk bad about them. It's got to end. The only way that this is going to be successful is if that ends. Removes the fear and anxiety associated with current credit situation. These people are scared. They want to come in and tell you, listen, I have credit problems. What do I do? But our normal sales process in the franchise dealer that doesn't have a special finance department treats them the same way. So they just go along. We do this every day, hundreds of times a week. They do it once every 3 to 5 years. So they're going to do exactly what you tell them to do. You're in control. If you take them out and start showing them $40,000 cars, they're going to go along for the ride because of the fear and the anxiety. You got to break down those walls. The special finance department and the dedicated process does that. Provides hope for those in need. When you provide hope for these people, they are the most loyal customer you'll ever have. You'll have them for life. They'll tell everyone. They are raving fans. And all it takes is for you to provide them hope. Provides opportunities for individuals and family to better their lives through the purchase of reliable transportation. Notice I said reliable transportation. We're improving their reliable transportation on the reestablishing loan. It's not what they want. It's not their pie in the sky. We're selling the future. We're providing them a step up and an opportunity to get from where they are to where they want to be. Dedicated special finance professionals provide a strategy or roadmap, tangible timeline. When we say we're selling the future, it's not just about selling the car. We're credit counseling these guys and these gals and these families on what it takes to get from where they are today to where they need to be. I've had so many customers call me at the 6-month mark. Hey, I'm 6 months through, I haven't missed a payment. At the 12-month mark, they call. I'm 12 months through, I haven't missed a payment. You're not going to believe this. I got 3 pre-approved credit cards in the mail. You were right. I tell them to take them. Don't use them. Use them here once in a while just to establish the trade line. And if they listened to me on the purchase and went 42 or 48 months, once we're more than halfway through the term of the loan and they saved a little money for down payment, they're back. That manufacturer finance company is begging for that customer the second time around. There's no better exercise for the heart than reaching down and lifting people up. John Holmes. Okay? If we go a little further into this, as far as the impacts, when you do it the way I'm explaining to do it, they have options. You're not slamming them in the car. You're explaining to them the realities of their situation, what the banks will restrict, what they won't restrict, and they're making the decision. It empowers them. It empowers them. It gives them all their options and lets them make it, okay? Ensures the customer understands how this decision can impact their future options and impact their lives for the better. Again, we're selling the future. It's important to not just sell the car, to sell the future. Reverse process, specific to loan origination and bank restrictions, ensures a fully transparent, world-class experience. When you work it backward, they're thankful. They want to know what they can and can't do before they go pick out a car, before they make a decision on what kind of payment they're going to make. Because let's face it, we put them in the wrong car, the wrong vehicle that's too expensive, and they agree. We are setting them up for failure. I'm a second chance bank. That's what global lending is. I don't know a lot of third chance banks. That's that mom and pop we were talking about down the street where they carry the note. We don't want to put them there. They don't want to go there. And again, it creates a raving fan customer loyalty for the highest level of repeat and referral business. We change the world a little each day with our kindness. That's what we're doing. Folks, when you do this, you are impacting lives and changing someone's world. I've done it. I did it. We did over 100,000 sales at that department since I started it. Over 100,000. We drew the line at 620 and below. If it was below 620, it went to us. Some dealers today are going 580. Let's face it, the captives are buying deep. You may not need to go 620. That 580, Ford might buy, Toyota might buy, Honda might buy on an entry-level car. And the last thing I have up there is do not yield. What I find is the people who get it and become passionate about this get senior management and ownership involved. And then as it starts to unfold, they start to yield to their discomfort. It's not a channel they're comfortable with. They've all become rich and have a very comfortable life, your dealer principals and your owners, in the channel they're in. They tend to yield to their discomfort, even though they're seeing the fruits of their labor. They want to stop it at 30, 40. You know, hey, we're making an extra $1 million a year, let's stop it there. It's the job of everyone in the dealership to sell the owners on the fact that we don't need to stop here. We can take this to the next level. No one else is doing it. People will drive 2 hours to come buy a vehicle from us. I'll be available after, folks, and I hope you enjoyed. You know, I'm a little passionate about this, if you can't tell. This is my passion. And the fact that Mr. Duncan brought me on and is allowing me to do this nationwide and talk to people and really spread the word and raise awareness, I couldn't be more thankful. I mean, global lending, we are a relationship lender. We're taking things back to the way it was before. We don't have a computer model that says, you call and say, well, hey, hang on, the daughter had cancer. Sorry, I can't buy it. The computer said no. There's a live buyer on every one of our deals. We're a relationship bank. Call back within 30 minutes. Call us and tell us what the circumstance was. We'll find a way to buy that deal. We'll be your long-term partner. It's a relationship lender where we put the people first. Win, win, win. Customer, dealer, lender. I'll be available after, folks, for any questions you have. Thank you for the opportunity to speak today, and thank you all for braving it and getting here with roads closed and torrential rains and floods and cancellations of flights. You all troopers. I'm really glad you made it here, and it was an absolute pleasure to speak to you all. Thank you.